Day, February 14, 2020. Go around.
Yeah, George Elmore, committee member.
Jack Warner, committee member.
Mike Burke, CFO.
Ron Horan, Treasury.
Aretha McIntyre, Treasury.
Brenda Giampetti, Treasury.
Leanne Evans, District Treasurer.
Steve Alexander, PFM. Good morning.
Bill Moore, committee member.
Rick Miller, committee member. And we've got Claire.
Blair Littlejohn from the General Counsel's Office.
Oh, yeah.
Mike Baldwin from Jeffries.
Anna Ohanian with Citigroup.
Okay, you all leading the charge on financing now.
Yeah.
All right. So we have our agenda. Any changes suggested to the agenda, Leanne? Are we good?
No, we'll run right through it as presented.
Okay. So the approval of the agenda?
So moved.
Second.
Sorry, second.
Seeing any opposition? That's passed. Approval of the minutes of December 6th.
So moved.
Second.
Aye.
Any opposed? That passes. Okay, public comments? Do you have any? All righty. So our first item is the quarterly report, investment reports. Is that Steve?
Okay, well, Steve's going to start it off, and I'll be chiming in and go over the district report as well. I first want to say thank you for attending and welcome. We look forward to some discussion today about our investments. We've had a little thing we're going to talk about that Rick and I had talked about in the last couple weeks. We'll bring that up and cover that as well. A challenge with another school district that we wanted to make sure we covered with you. So we have the investment reports, and we have one change to the investment policy that I wanted to bring back to you. And then we need a brief discussion on our attorney's contracts that we want to do another year. But I think I'm going to turn it over and let Steve talk about the market and our investment portfolio.
All right. Good morning, everybody. Happy Friday. Happy Valentine's Day. And thanks to Leanne, we have nice strawberries. So it's and others. So let's just go over a little bit about the economy that is in the report here today. This is just kind of give you an understanding of GDP in most recent times. Here you can see third quarter, second quarter, first quarter of 2019. Some pretty good numbers. It was interesting to see that personal consumption was a little bit lower this last quarter, third quarter, than it was in the second quarter, but an overall 2.1 for GDP. I think the next page really kind of brings the whole economy into these really two lines, or kind of give you an idea of what the economy looks like. I think consumer confidence is at pretty much an all-time high since the recession, and continues to move in a very strong direction. And just the opposite with the unemployment number. And these two, I think, gives a nice sentiment of what the economy feels like, what's happening overall. Job market is still very tight. A lot of professional firms are having troubles finding folks to fill positions, and that's evident with how the unemployment rate's going down, and the consumer confidence continues to move up. Some more good economic news. If you look at new home sales, this is, of course, a national number, highest level in 12 years. And you can see that that line has been moving in a very positive direction since the 2002 to 2008 time frame. At the same point here, you could see manufacturing is still above 50 on the index. So on this index, anything at greater than 50 refers to an expansion. Any number that's less than 50 on the index is a contraction. This is a good leading economic indicator. It's showing what manufacturing is doing, and it certainly continues to move in a positive since the summer of 2019. But it's all been for several years above the 50, so that's a really good number. And if you think of where the unemployment number is versus manufacturing, it kind of all makes sense that both of those numbers are moving in the right direction. And of course, good manufacturing numbers usually means that home sales are moving up, because that usually means that folks are buying very large items. So all those numbers kind of paints a good picture of what the economy is doing. I'll sign that later.
So is market misspelled, or that's the way it's supposed to be spelled? Manufacturing active.
Market.
M-A-R-K-I-T.
That's a company name.
That's the company name of the
Okay.
index, yes.
Good.
Yes. Great catch. Thank you for reading the slide.
That's what I do.
Yeah. I'm going
Proofread.
to put some more things that are unique in these slides and see if people catch it. Yeah. Just to kind of give you an overview now that we've finished the year of 2019 from a calendar perspective. You remember in 2017 and 18 we had 7 Fed increases just in those 2 years. We had that magical moment in December of 2018, if you remember the mid part of the December when the equity markets and fixed income markets kind of all fell apart at the same time, and we had a really pretty bad December and a tough January. And then the Fed, of course, really pivoted from thinking about raising rates in 2019 to actually cutting rates 3 times in 2019. You can see the quote there from Fed Chairman Powell. I think that's a pretty clear quote of where we are for 2020. And I think so far, depending on what happens in the marketplace, and of course we have lots of risk out there with the virus, and that could impact manufacturing, it could impact importing and exporting. We'll have to see how that situation develops, and it's continuing to develop. And as more news comes out, it appears to be probably more significant than originally thought of. But putting that to the side, at this point, the projection is that the Fed is most likely going to be on hold this year. But it's always in the back of my mind what happened December of 2018. Things can change very quickly. So we have to keep a kind of a long-term strategy in place.
What was the cause then, December 18?
Well, before, in the early parts of the fall of 2018, if you look at the economy, inflation was moving up. We saw the unemployment rates dropping. The participation market for the labor market was growing. The manufacturing numbers, all those things were moving very well. Then we saw the downturn, not only here domestically, was also from our trading partners in Europe and China all kind of declined, and we saw sort of the economy react to that, and therefore the Fed realized that the rising of interest rates wasn't necessary, so they decided to start cutting back.
Mm-hmm.
And if you lay over the Fed funds rate versus inflation rate, it kind of makes sense. Inflation was not as high as they anticipated, so they cut back.
Well, I think there are people who think that it was the first modest attempt by the Federal Reserve to normalize interest rates on an historical basis, and it was obviously a disastrous flop, and so we're back at let's all
really low
let's all generate some more money. I was just going to ask you, and I know you don't want to spend a lot of time on this, but just let me ask you. I continue to be. I mean, although Chairman Powell earlier this week was telling everybody not to be concerned about the repo problem and et cetera. But my experience over the years has been liquidity problems are always precursors to some financial issue problem, and the Fed seems to be saying not to worry, everything is fine, and no doubt that's probably true. But it flies in the face of my limited historical experience, and I just wondered if you'd comment on that. I mean, he just said this is not a problem, it's going to go away, et cetera, but in the inability to finance an overnight market with risk-free securities at anything other than exorbitant interest rates seems to be a concerning matter.
And how does that affect us, you think, Bill?
Well, I mean, I think it indicates that there either isn't sufficient amount there aren't sufficient amount of funds in the system, or people are simply apprehensive about the financial institutions that are on the other side of the trade. In other words, the ones who want to carry these securities overnight and need the financing in order to own them. I don't know. I'm
Yeah,
just
and I
curious.
also, I would also say that the rate cuts also helps into that situation.
Yes.
And I think part of that message of what Powell was saying is that not to be concerned about, but that's part of the reason they cut rates. And that helps with the liquidity as well. So I'm sure there's more to the story than what is being transmitted to us. But I think those rate cuts are part of the story to help with that liquidity situation.
Isn't it a cause to worry when you're told not to worry?
That's why we have a well-diversified portfolio, right? We try to help mitigate that risk. That unknown risk is the biggest part. We just don't know. So we have high credit quality securities. We have lots of treasuries. We have short-term securities. So
And we don't need the short-term.
right.
We are on the other, if anything, on the other side of the trade. We don't need the financing.
We don't need the financing.
I
So
want to correct Bill on one thing. Your limited historical experience?
Well,
Really?
No, it's not true. I mean, I know what I read in the paper, or at least what I see on CNBC, so that's kind of frightening when you think about it.
I think your clairvoyance is...
But I mean, it is, it
Yeah.
does, it seems to have been, of course, the corona thing is no doubt more serious, but it seems to be put aside, and he was reassuring about it all the other day, and he was testifying in Congress, and so I guess there's nothing to worry about. I just find it something that we should, people should,
Keep in mind.
historically have always
Yes.
been concerned about it.
Yes.
Maybe it's not a problem today.
No, but I agree with you. It's always important, and just like leading up to the Great Recession, there was red flags that we noticed and were concerned about, and you have to keep that always in mind. You can't be blind to that type of information, and it has to be part of the thought process. So I agree with you wholeheartedly.
And is the coronavirus, is that now having an impact, an immediate impact?
I think we're going to see over the next couple of weeks, there's going to be some impact to it. I think, I don't know what it's going to be. It's a big situation that I think it's unfolding. Can it be contained? That's the big issue. Apparently they're running out of the kits for testing, so now they're using more expensive testing mechanisms. The numbers are growing. We know that China is not very transparent, to say the least. So do we know the full story? I don't think so. So many of our products are coming from China. We may see some delays. We may see some prices go up. It's an unfolding issue, and one we should be watching very carefully.
Yeah, I would think that'd be happening right now, and that's
Yeah.
what,
Yeah.
but, it will have an impact. All
It's-
right.
If anything,
So on that
it'll
good
drive
news-
interest rates down.
Pardon?
I say, if anything, it will drive interest rates down.
Exactly. Yeah.
So, because lack of activity in the
Activity.
in the
Absolutely.
market,
Right.
in the non-financial.
You know, and economists are already talking about it's going to have some effect on GDP in the quarters to
Yeah.
come. It certainly will, depending on how long this goes and how big it gets, and no one really knows. So just on a happier note, we'll move on to the next chart. This kind of give you an idea of where the yield curve has been through 2019 and where we started off or ended up on 2019. You can see the dark blue line is December 31st, the end of the quarter. A little more normalized yield curve. Of course, the whole curve has shifted down since December of last year, steepened a little bit. The inversion is a little bit less pronounced now that the Fed had cut rates 3 times in 2019. So a little bit more positive sloping yield curve. And then you can see how the steepness differential between September, the dotted line, and December. And of course, that will factor into total return numbers. So we had a lot of discussion last year, the calendar year, about all this potential recession. That was always kind of on the news on an ongoing basis, when the recession was coming, when is it coming, how big is it going to be? You know, at some point it will come. That's just part of the business cycle. But certainly the numbers I showed you earlier doesn't indicate there was a recession around the corner. The economy still seems to be strong and positive. So the probability really a decline in the last quarter of 2019 and into 2020. From a yield perspective, we look at the 3-year Treasury notes, kind of a good proxy of your overall yield curve. You can see that in the last fourth quarter of 2019, the 3-year Treasury note kind of stabilized. It was kind of all over the map in 2019, but the last quarter kind of got into a trading range and has stayed consistent in that range for the last couple months now. 2019 was a strong year for
Page 10.
Treasury indices. So these are just Treasury indices in the blue bars on the right-hand side. You can see from 3 months all the way out to the 15 years, some pretty big numbers. And you probably would think of a 14% being an equity return, but it's a Treasury return. The quarter numbers are in that black dotted line of, on the far left, all the way from U.S. Treasuries to BBB corporates, and you can see how their returns were for the quarter as well as for the year. So obviously, lower.
Because their interest rates going down, these
Exactly, that helped
returns are
as
going
well.
up.
As well, yep.
Wow. Jeez.
We did see corporate spreads decline a little bit in 2019 and also in the quarter. You can see the yield curve on the upper right-hand corner, the difference between 18 and 2019, where we dropped down. And then the opposite is happening on the S&P 500, continue to march up all through 2019. It was a very, very strong year. This next chart represents our kind of our heat map, if you will, the preferences for various sectors across the permitted investments, if you will. You look through here, starting with commercial paper and ending up with securitized securities as well as taxable munis. The green represents, slightly positive. That means that's more favorable to be purchased. And then the slightly negative kind of the yellow and orange. You'll notice that the federal agencies were just not very keen to buy those as we used to, just because there's virtually no spread between agencies and treasuries. So we'll just go ahead and buy the treasuries instead. All right, and taking a look at the long-term portfolio, and I don't know if do you want to go do the long-term, then come back to the short-term, or do you want to talk about the short-term first? I know we probably have a little bit out of order, but. Okay, continue on. Okay, just want to make sure. This is the core portfolio. As you know, that in 2019, we actually raised the par amount in the longer-term portfolio. Leanne and her staff has been doing a terrific job in really fine-tuning the cash flow analysis and really looking at what cash could be invested a little bit longer. Historically, we had the core portfolio around this amount, and then several years ago, due to capital needs, we had to really cut the core portfolio in half, and then based on new cash flow analysis and the position of the school district, we were able to add that money back to the core portfolio, which really came at a right time. We don't like to be market timers, but this was from a market perspective a pretty good time in 2019 to add that back to the portfolio. Excuse me. You'll see the average credit quality of the portfolio is AA. We're running a duration of a little bit less than 2 years, 178 in years. The benchmark is about, I think, 180 and 185 or so. You'll notice that in speaking of credit quality, we have about 70% in treasuries. So we have a really healthy portion of the portfolio sitting in the highest position possible. So lots of liquidity in this portfolio. We can liquidate this portfolio in any given day if something was to come up, with only about 26% in corporates, and then you can see a really small amount in agencies and munis. So, as I said before in that heat map, Our preference between agencies and treasuries is to go with treasuries, and then, of course, followed by corporates. And this is very consistent to what we said about 4 or 5 years ago, that portfolios based on a Fannie Mae and Freddie Mac situation will slowly migrate to being corporates and treasuries. And that's kind of where we are today.
And those corporates are short-term corporates.
Yes, yes. Everything is less than 2 years or so, roughly speaking. And in fact, you can see on the maturity distribution, Rick, the vast majority of this portfolio is in the 1 to 2 year area. So you see about 48 and 41%. So, and with an overall duration of less than 2 years. See
If
that?
you were suddenly, someone suddenly left the school board, $100 million this morning, would you go further out on the curve, or would you?
Would go further out.
Yeah, I was going to say, it seems to me all the risk is that the interest rates are going to go down rather than they're going to go up as well. I'm
If you're ready to write that check.
I'm right. Yeah, I know.
Are you thinking,
Easy for me to say because it's not my money. So
are you thinking of lengthening now at this point, though?
Well, I think we're fine based on what we have. But to his point, if we had an hypothetical, it certainly would.
Windfall,
Yeah, it would go further out.
Typically, the school district money, most of it is in the short-term portfolio. It's money that we'll use over the course of the
Spend it,
first year.
Right.
And so this is really the board's contingency reserve and then a little extra. And this could be used at any time. If we had a hurricane or some natural disaster or some reason to dip into that. So as much as we'd like to go really long-term, the school district by nature just isn't a long-term investment.
no, I didn't
Yeah.
mean that. I'm talking about a matter of months.
Oh, yeah.
I'm not talking about doing anything really.
But the concept is true that longer term would be more valuable.
Right.
Yeah, yeah. No question. So speaking of returns, you'll see here's the benchmark, which is the Merrill 1 to 3 U.S. Treasury Index. The durations of 184 in years were a little bit less than that 178. The quarter return was 56 basis points. It's just an unannualized quarter return versus the benchmark of 51. We ended up the calendar year at a 371, and the benchmark was a 355. And so it was a positive 16 basis points. And then you'll see the various slices, the 3-year, 5-year, and 10-year, and then since inception, we're 22 basis points ahead of the benchmark. So continuously to outperform the benchmark, given the fact that we only have, like I said, 25, 30% in corporates, the rest is treasuries. So it was a good time to add the dollars back to the portfolio, so that all worked out really well. Look at the actual dollars on a market value basis. You'll see that we started the quarter at 43 million. We added the portfolio dollars that we just talked about to raise it up to the 84. And the portfolio earnings on a total return basis was 327,000 for the quarter. And that 53,000 represents market value increase, and that's because of the declining in interest rates. Just to kind of give you an idea of how the portfolio has changed over the time frame here. This actually goes back to March of 2019. You'll see the big discussion here. As you can see how the blue, which is the federal agencies, continue to decline throughout the year to where we are with more treasuries, less agencies, and about the same in corporates. You can see a little bit less in the December quarter compared to September, but it kind of fluctuates. It's based on supply and demand as corporations are issuing, and if there's a good, healthy spread for us to buy corporates. But we're kind of in that training range of 25 to 30% of the portfolio is in corporates, and the rest is in treasuries. Just to kind of give you an idea of corporate holdings, credit quality holdings, 75% of the portfolio is in AA+, and then you can see how it moves down the credit ratings throughout the portfolio. But 2/3 of the portfolio is in AA place. Of course, that's from an S&P perspective. And then, Leanne, do you want to then, is there anything you want to talk about, the short term?
I think you can pull, it's easier, I think it's
Okay.
easier to see on your side.
Okay.
We did a lot of investing of money in the short-term portfolio in December, tax revenues, a lot of it came in the month of December. So I don't know if you want to pull it up on yours or if you want to switch over to mine. But we need to talk about some other, do you have anything else on yours that you want to talk about? So
Yeah.
you might want to stick with your screen for the moment.
Okay.
But if we go to the short term, we can just show the asset allocation where it was invested at.
Yeah, that'll be right. That'll be right here. So the short term was 19.6% in treasuries and 80.4% in commercial paper, and everything is less than a year.
Right. It's $560 million.
Right.
So there's a lot of investment activity that takes place in the month of December. Looking at tax revenues and again projections and when we think we'll need the cash. This is payroll, it's accounts payable, it's sales tax money being invested and then spent. So this is all short duration, but we do want to get as much of it invested as we can. And it's always a challenge in December trying to get that done. Who's in the market, who's issuing debt at that time. But that's how we ended up getting it placed.
Pretty darn good return for that. isn't it?
It's a good return, but like Leanne said, I can't emphasize enough that December is always a very challenging month to buy corporates because everybody's sort of closing out the year.
And we actually have some more money to invest that we're still working on. We got the bulk of it done.
Right.
We had some money that came in very late in December and more in January, so we're looking at options of when that can be invested and how long it can go for. So we're still working on pieces of it. We're also, and when I pull up my report, we'll be able to show you that a little better. But I wanted to stay on your screen for a little while because I think we need to talk about what happened with Brevard.
Yeah, so I wanted to Leanne and I wanted to bring up to date, and I think we talked to Rick about, there was an article in the Florida Today newspaper. The educational reporter in Brevard wrote an article looking at Brevard schools and looking at some of their corporate holdings. These are various banks, like for instance HSBC, U.S. Bank, Robobank, a few other banks, really some of the largest banks in the world. And 10 years ago, 8 years ago, 12 years ago, they had some various issues with money laundering. Some money, they said, went to the cartel. Some went to some terrorist organizations or of some sort. So various activities that they all got caught doing. They were prosecuted. The banks had made changes in their internal controls. They beefed up their surveillance.
They paid very large fines.
They paid lots of very large fines. Some actually signed agreements with the U.S. Treasury Department to make some changes over the next 5 years. But this all happened like 10, 12, 8 years ago. And so the article came out, and it made it seem like this was all happening today and that the school district was investing with really bad banks. So they try to make a really, kind of stink out of it, if you will. So we wanted to alert you. We do have HSBC holdings in Palm Beach School Board's portfolio. At the time when these events happened, of course, we made modifications to how far we could go out with maturities based on the information at the time. Obviously, we take into account if there's going to be any big financial impact from these situations to the bottom line of the bank. We're going to adjust the holdings. We're going to put them on a hold. We're going to put them on a watch, whatever it takes to ensure the credit quality going forward. But again, it was an article that came out based on old articles, and it kind of made it sound like it was happening today. But the school district at Brevard is not making any changes. They didn't sell any of their securities. They're holding on to everything because of the fact that this is such outdated information. It's to be realized that there's not many banks out there that haven't had some kind of problems of all sorts of stuff. So we do take that into account. We watch for that. There was part of the article talked about the whole ESG. I don't know if you're familiar with ESG screening. This is environmental, social, governance. You've probably seen that regarding pension plans have that whole extra screening for those characteristics. And that is, for instance, in the world of pensions, they could buy shares of stocks from a company that's doing fracking, or a company that is in some foreign country that we may not like. And so certain companies can be eliminated or make sure that their asset allocation is a small dollar amount. So there's different ways to handle it, but so far the Brevard School District hasn't made any changes. They're sticking to what they have, realizing that this is all such old news, but we want to make sure you're aware of it. No other school district has changed anything based on this situation. But
Yeah. Steve and I spent a lot of time on the phone when that was first going on, because you also had the superintendent of Brevard that called our school board member, Mr. Shaw, because they both serve on the advisory committee for Florida Palm. So then we were looking at it as in respect to the pools as well. So these same securities that were questioned are in the Florida Palm, they're in Florida Prime, which is a state-run pool. They're in all the major pools, money market funds. These are the largest banks in the world, and it's old news.
The biggest bank in Europe.
Right. It's really old news. So we spent a lot of time looking at it and came to the conclusion that no changes need to be made. When we looked at the investment policy, I am adding a sentence in, and I'll show you that. It's just indicating that we should not invest in any entity that is on the SDN list, which is the list the U.S. Treasury maintains of companies we should not do business with. None of these firms are on that list. But it's that's a good thing to have in the investment policy. It had never come up before. So I'll show you. I've just added a sentence in.
That's the change you're proposing.
That's the change I'm proposing. It doesn't change. There's no immediate impact on our portfolio. I think that all that's already been taken into account. PFM has been monitoring that list anyways. But it just puts it in policy so that we have it
Let's
in
get the
writing.
reaction by the board members, and also on the green aspect. I don't know what you're doing on that, but I think.
Right now, I'm monitoring it. That's something where the advisory committee for the pool will be talking about next week. And I want to think about it over the course of the year, because when you do that, it's a good concept, but we also already have trouble finding investments. It's a hard
Aren't you
thing to
skewing your
find.
investments when you do that?
It's limiting the pool of things we can invest in. So it's not something I'm eager to jump into right now. I want to watch and see how that plays out over the course of the next year. And when we look at the investment policy next December, it's something we can talk about. I'd love to hear the discussion that y'all may have about it now. It's something I'm thinking that might be appropriate in the future, but I don't know that I want to jump into it right now.
Any thoughts on either the green or the?
Just a quick question. Did they get the reporter to retract?
No.
No. And it was interesting, there were no comments.
It surprises me.
Yeah.
Because usually when they make a mistake like that, they retract it in a very minor corner of the paper somewhere.
Well, what they said wasn't
Last
wrong, it's just old.
it's just old. Yeah.
It's
Well, they
just
should have,
old.
they should have
Well,
said
it is
that.
wrong. It's wrong to take that into account when you're 10 years past it, and there's been a recourse, basically.
Exactly.
What he's trying to do is to help his byline or whatever.
right.
That's right.
Yep.
But we wanted to be sure you were aware of it. Leanne and I want to make sure you're not blindsided about it, you're fully informed. There's been lots of discussion about it, a lot of analysis going over it, and like I said, we've talked to many school districts that we work with. No one's making any changes. Brevard is holding on to what they have. But we felt like it's important to make sure you're aware of it.
Right. When that happened, I called Rick. I wanted to make sure he was aware of it as well, as the chair of the committee. So I don't see a need to make any change other than the policy change that I'll show you in a few minutes.
I think that's a good
Yeah.
suggestion,
Yeah.
period, whether or not.
Right.
And as far as the whole ESG scan, we can certainly talk more about that. It's a long conversation. There's a lot to talk about. We have an analytical company that provides us all the ESG screenings, but it's a big topic, and there's a lot of factors and characteristics going through it, because then you're moving beyond sort of the financial and credit review analysis, and you're moving on to a lot of other categories that really has to be decided on, for lack of better words, sort of where's the moral line, if you will.
Right.
Who decides that moral line? So it's a very, very complicated situation to jump into, and it's not something you do overnight. But if you want to, we can walk you through.
Let me ask you a question on that. Let's say you put a greater concentration in that area. Doesn't that create a further risk in the sense that some energy programs and concepts are going to go up and down? In other words, who knows? I don't know.
Yeah.
There are some things, wind energy or something that
Absolutely.
really have a problem.
Right, right.
And we may be overexposed to that.
It reduces the diversification,
Yeah, that's-
the ability to
Right.
diversify.
Yeah.
Yeah, on sort of an unnatural basis, basically. And you hope that green is good,
Right,
but green may be political more than it
Yeah.
is good.
right.
Who knows?
Well, it
That's my
wasn't
view. I
something
don't
that
know.
I,
It seems to me, that's, we're, as you said, we have to seek out high-quality investments. And for example, to dismiss Exxon because they're in the fossil fuel business seems, I mean, I'm sure that even whoever it is you're posing this isn't suggesting that, but maybe they are. I mean, after all, let's get serious here. This is
Right.
nonsense,
But the important thing is when these financial situations or criminal action happens, our credit committee looks at those and we make a determination of how that's going to affect the credit quality. And when these situations do happen, like for instance, you can remember back in 2007, 2008, we were concerned about Lehman Brothers before it became kind of national news. We took action. We liquidated them and didn't have exposure to them. So we're watching that. The corporate market is a very fast-paced market. There's always something happening, always some news happening, and we have to take that into account.
Super.
So we want to make sure you're aware of that, and it's all been fully vetted and looked at. The final part of the report, at least from my perspective here, is the asset allocation. So this is the report that shows the permitted investments pursuant to the investment policy. Everything is in compliance. And of course, December is a very challenging month because of all the tax dollars are coming in all at once. And so the close coordination between our firm and Leanne's staff was really, really good. And all this money got put to work in a very challenging market time because of the fact that December is a very busy time for everybody, both public and private, and it's to find securities is very challenging. But it all got put to work.
Were we overstocked there in the intergovernmental pools, or is that just because we had to be? Nothing else to invest in?
No, we're at 19.42%. Where were you saying?
That's what I'm saying, the 19%.
Oh, okay.
yeah, we're allowed, policy allows up to 50%.
Up to 50, yeah.
I'm up to
Yeah.
50.
Yeah.
Yeah, we were in compliance.
Yeah, everything's in compliance, yeah. And that number goes down. It looks big now,
big,
but
yeah.
you wait till about April, May, it'll be, a third of it will
Right.
be gone.
We
or
ladder
more.
the investments, and really what I try to do is the investments that we're putting in treasury and agencies, they have maturities from April usually, sometimes a little early, but I shoot for about April through September.
Right.
So that's the longer term. The shorter term is in the pools and in cash, because we'll spin that down first. If you try to invest in securities for January, February, the return is so low, I'm better off putting it in pools where there's a lot of different securities in there.
Right.
So I can get a better return. So we use the pools are much like money market funds. And the only reason you see money market funds there is that is money that's with the trustee. So that's debt service payments that were due February 1st. And we have to send the money up in December, and we use some money markets there, but we don't really use a lot of them.
Yeah.
It's more in pools. That number will go down, has already gone down
Yeah,
with
it's
the
already
February 1st debt service payments.
Yeah.
That caused it to go down, and payroll is running off at $60 million every 2 weeks. So those numbers drop pretty quickly.
Yeah, it's probably safe to say that December is the peak, and then
Right.
it just goes straight down all the way until next December.
We're not having to do any borrowing in the meantime, are we? short term?
Well, we do the TAN. We
Yeah,
do the TAN every year in September, October. Our lowest point in cash is November.
Right.
With that payroll that happens in November, and then tax revenues start coming in.
So we are continuing.
So we've already taken, as soon as the first tax revenues came in, we locked in an investment for the TAN. We took all those proceeds and locked it in. It will mature, I believe, on August 26th, and the payment's due on August 28th. So we lock that up at that's the very first thing we do to try to eke out some positive arbitrage on that account. So we just needed it for a short period of time that we do. General fund runs negative while we're waiting for the tax revenues to come in. There's other cash in other funds, but we look at just the general fund.
Okay, that's it.
So, Mark, I want to go ahead and switch it over to the laptop if you can. We'll switch from Steve's computer over to mine.
Excellent.
Okay. Thank you very much. So this is the other quarterly investment report that the district does. So it's taking into account all the pieces, which the PFM report does as well. We do our own so that we always try to double check. We double check everything they do. We have to check to make sure everything ties out. We reconcile them. But this is the district's version of it. So interest earnings, we already talked about the core portfolio and the returns, so I'm going to skip over that. But interest earnings so far this year are $8.7 million versus $7.3 million last year. And I want to point out, interest rates are less. The interest earnings is higher because we have the proceeds from the operating budget referendum. We have more cash to invest this year than we did last year. So even though rates are less, we have more interest earnings, and it's not the rate that's causing it, it's just the extra cash that we have.
Okay, so that's our cash earnings.
Right. This is extra money that we've invested more this year than we did last year. There's just more cash to work with. Tax collections are at 81% as of the end of December. Last year was a 78. That changes from year to year. We monitor that. I've got lots of spreadsheets tracking that, but it's just some interesting statistics. So people paid their taxes a little earlier this year. Sales tax collections continue to do really well. They're at 115% of projections. So those of you that come to our Sales Tax Oversight Committee, you'll get more details on that at the end of the month at that meeting. But to date, we've collected almost 30% of the tax revenues. So it's running right along. Again, ahead of projections. Interest revenues on that sales tax program, net of fees, are about $7 million. So again, the sales tax program is working really, really well. This is just going over the quarterly returns and the various benchmarks. Everything is exceeding the benchmarks this time. And here's a little summary chart that just shows the interest earnings. So again, we're ahead of where we were last year. And this is the total portfolio distribution. So this is looking at the short-term and the core and the cash. This is all of it and showing how it's invested. This small amount that's out at 3 to 4 years, that's money with the QSCIB, the Qualified School Construction Bond. We set something up with Barclays. We did a forward delivery agreement back in 2010, and that has kicked in, and some of their investments are longer term. So this is looking at every bit of money that we have, even money that's not completely under our control, but how it's been invested. And the asset allocation, again, this is very similar to what Steve showed you, similar dollar amounts, but this is all the portfolios together. And this is the chart that I work in. This is where we see, overall, this is last year's peak, and this is this year's peak. So there is more money this year than we had last year. We do have some money still to invest that I'm working on. It's shorter term. I don't want to put necessarily more money in pools. We're actually looking at a couple of banks that are willing to give us really good rates on money markets that are fully collateralized. So that would diversify our portfolio a little bit more. So that's what we're looking at for some of this extra cash. And this is just a total list, and this breaks it out by type of security and then by firm. So this information is in your package as well, just all the securities. This is what's at Bank of New York, and that's where you see some longer term, some other assets that are out there. And I think the last part is the sales tax report. This is as of December, and again, it shows the total interest revenues less interest expense. And the expense that you see there, that's that revolving line of credit that we approved last year. We still have not drawn on that. I still don't foresee we will draw on it. It's just there for budgetary purposes. So the fees are at 0.1%, really, really low fee. And the expected fee through the life of the line of credit is significantly less than our interest earnings to date. So we are making money on the whole program overall. Expenditures are starting to peak up. You know, we've got $200 million of expenditures so far. And there's a tremendous amount of work coming with the sales tax contracts being let right now, of work that'll be done over the summer. So we're going to start to see this peak continue to grow.
Is the line of credit sufficient to cover you?
It is for right now. I'm looking at probably April. We'd originally intended to raise it to $120 million. I'm thinking it's only going to be to $100 million because tax revenues are still coming in faster than we're spending it. So the amount, we will increase it. It's what we needed for budgetary purposes. I'm just watching to see how much revenue we continue to collect through April, and we'll have to make a change at that point. So we'll bring that back to the committee just to say it's the existing line of credit. We're authorized up to $200 million, but we'll go back and make a conscious decision. There's a legal document that has to be approved. It doesn't need to go back to the board, but there's a document we need to do to increase it. So we'll make sure the committee is apprised.
So you
before we
had a
do that.
maximum that was higher with the board?
We went up to $200 million, so we'll only increase this line of credit up to about $100 million for this year, I believe. And then behind this is just the fact sheets on the pools. We try to provide that to you, just as good information so that you have it on how the pools are doing. If you don't have any other questions on the investment portfolio, I want to flip over to the investment policy and just show you the one sentence change I'd like to make.
Before you do, I want to congratulate you, and I'm sure everybody agrees with this. Between PFM and their expert advice and your knowledge, this is run extremely well. Looks like one of the better corporate type of operations, frankly. And forget about government. Terrific.
Thank you.
No,
Thank you very much.
You agree with that?
Yeah, I agree.
So sophisticated and so well done.
I think that's an excellent comment, and I'd suggest that we advise the board, please, that that's the view of the Finance Committee. So, thank you.
I'm happy to make a report if you'd like.
Okay, we're actually planning on having a report to the board at the meeting, hopefully in March, when we do the COPS issue. We wanted to make sure we provide them an update on the committee, so I was going to draft that report and send it over to you, and we can make arrangements for that.
Good.
I'd like to make sure I comment. I have a wonderful staff that, and the legal team that helps us get everything done. But Laretha actually prepares the quarterly investment report, so she's the one pulling all the documentation together. So I have a great team. Could not do what we do without them.
I agree.
Sure do. Bravo.
Bravo.
When you send that draft report over, include a self-congratulatory paragraph,
Okay.
which reflects the conversation we just had.
For sure.
I'll draft it
Sure,
up and
make
send
sure
it
you
to
do.
Rick, and he can add his comments to it.
Put a little star next to it.
Okay, on the investment policy, I brought right to the screen, this is the line, it's lines 263 to 265. We just reviewed this policy in December, so I'm just pointing out the one sentence I'd like to add. Just no investment should be made for any entity on this specially designated nationals SDN list, which is maintained by the Office of Foreign Assets Control, U.S. Department of Treasury.
Okay, so that means that you can't make it, but you don't have to dump it, do you? I mean, that's the other part of it.
Right, I said no investment should be made for
Right.
any entity.
So I think that's intentional, right?
I did. Now, if there's a problem, it may be something that we decide we want to
May deal
sell,
with it,
but that it doesn't require it.
Yeah.
And
good.
the entire investment policy is written with that same logic in mind.
Mm-hmm.
When we buy securities, we have to be in compliance with the limits on the investment policy. Throughout the year, if something happens, we don't necessarily have to sell securities to make sure we stay in that compliance. It needs to be in compliance when we purchase it,
At the time of
at the
purchase.
time of purchase. Typically, throughout the year, we do stay in compliance.
Oh, yeah.
It's very rare that we fall out of compliance middle of the year, but it's something that we monitor and report to you, and if we do go out of compliance, we let you know. But
Yeah, of
when
course
we
you're gonna-
purchase them.
If there
we're
is, you're going to
fine.
want to correct it over time, but you're not going to want to do anything.
Right. I mean, we could fall out of compliance due to market values.
Right.
Market values could go up and put us into a higher percentage where we're over, so you don't necessarily want to sell at that
No.
point.
Or
You could make
ratings
some money,
changes.
but,
Ratings changes.
right,
Same-
ratings change.
same thing.
Ratings change, right?
Speaking of ratings, I just wanted to let you know, we have spoken with Moody's and Fitch. They actually came down and met with us in connection with the COPS issue that we're doing. So I thought we'd see the Fitch report today. They've postponed that till Tuesday. So we'll have new ratings coming out in the next week. So when those come
Okay.
out, I'll be sure to share them with the committee.
Good, sorry I
members.
missed that, I was,
It's okay.
under the weather.
They went well. We had the superintendent was able to meet with Fitch. He wasn't able to meet with Moody's. There was an unexpected conflict. He wasn't able to be there. But we had a really good meeting with both of them. Mike Burke was there. We had some other staff members. I thought the meetings went really well. So when those reports come out, we'll share them with you. Okay, and the last item on the agenda, which
Do we
I,
need to prove that?
oh yes, I'm sorry. Yes, we do.
Yes.
I was moving right
Okay,
along.
any comment on,
I'll move approval.
Second.
Second.
all in favor?
Aye.
Motion passes unanimously.
Okay, the last item, and I didn't have anything on writing on this, it's a pretty simple thing, but I wanted to make sure we talked to the committee. We have contracts with our attorneys, and that contract is expiring. We'd actually piggybacked off Miami-Dade, and what we're doing is just negotiating directly with the same attorneys with the same terms.
Bond counsel.
Bond counsel and disclosure counsel. That will be going to the board also along with the COPS issue. The plan is to use the same terms and conditions. We're comfortable with the fee structure. It's based on the transactions that are done. So no significant changes. It's just that we're doing a contract direct instead of piggybacking off of Dade. So I wanted to make sure we brought that into the committee. If you had any questions.
Okay, so you're formalizing the contract
Right.
as it was with Dade, right?
Right,
using the
except
same-
it's going to be directly. It'll just be direct
Directly.
from the school district. Working with Blair, he's helping us, he's given me language, and we're working with the attorneys to finalize those contracts right now.
Okay, and you're happy with the situation?
Mhm.
Is there a need for a motion for that?
Yes, so moved.
Second.
All in favor?
Aye.
Aye.
Motion passes unanimously.
Okay. That's all I have for you today. So I'd
Well,
like to
happy
thank you all
Valentine's Day.
again
You
and
gave us
happy
a nice present here.
Valentine's.
That's right.
Before you leave, we do have strawberries and chocolate, so help yourself. Take one for the road if you'd like.
I think it's
Thank you
before and
again.
after, actually.
Well, thank you and happy
Thank you.
Valentine's Day.
Thanks again.
Leanne. Thanks,
Thank you,
Steve.
Leanne. Y'all do a good
Saw
job
Brenda,
this year.
Blair, rest of you. That's super, isn't it? Hey, super.
$2.5 billion.
Bill? Hey, super.
I couldn't agree more. I was going to say, I hope they y'all aren't too retiring and don't tell the board.